We start with the news of pain for consumers, where consumers will from July 1st pay 8 shillings more for a loaf of bread following the introduction of 16% VAT on the commodity. The new taxes contained in the Financial Bill 2021, once approved by Parliament, will also see the cost of borrowing go up 20%. Chemutai Goin has the details.
The ever-thinning revenue sources amid an increasing expenditure at a time when the country is battling the COVID-19 pandemic has had the government relook its strategies as it seeks to raise at least half of the 3.6 trillion budget in this financial year. Unfortunately for the taxpayer, they will have to bear the burden and pay the ultimate price as the Kenya Revenue Authority seeks to bridge its tax shortfall. Some of the proposals in the finance bill set to see food prices rise significantly should the National Assembly give the proposals a nod. Among the basic commodities that are set to be affected by the proposed taxation measures include bread, whose cost is set to increase as the government imposes a 16% VAT on the commodity. A loaf of bread, which is currently retailing at 50 shillings, will go up by 8 shillings. Infant powder milk has also been targeted, the price set to go up after the imposition of a 16% taxation. Borrowers will also be hard hit by the new proposal, which subjects loans to a processing fee of 20% excise duty. This means lenders will pass the cost to the borrowers, making loans more expensive. This notwithstanding the fact that the government already removed the capping on interest rates and allowed banks to charge in line with the central bank rate. And in what is likely to drive out a number of players in the extractive industry to some of the neighboring countries, the bill seeks to introduce a 10% duty on the operations relating to oil, gas and mining. The tax measures contained in the 2021 Finance Bill, however, has good news for internet users who will benefit from lower charges as those buying internet data services in bulk for onward selling will be able to credit excise made to the supplier, thereby passing on the gains. In the 2021-2022 budget policy statement, the National Treasury revealed that it was anticipating an over 140 billion shilling rise in interest payments on public debt. This is expected to eat further into the country's revenue. Chemutai Goin, Citizen TV.